Good morning. I'm Voltaire Lepe, CEO of Lepe Temo Properties, top 1% in the county of San Diego. Want to talk to you guys, keep this conversation going about setting goals on the type of lifestyle that you want to live, okay? So we've already talked about having a clear vision. That's super important. It reminds you why to wake up in the morning, why to even come into work and do what you do, right? We talked about Dave Ramsey's 7 baby steps. We'll go over that in a bit. Basically, how to create wealth and pay off debt and save. We talked about budgeting, how to create a budget for yourself, a personal budget, which is very important. We haven't even gotten into creating a budget for your business, a P&L. Paying off debt. We talked about the myths of debt, good debt, bad debt. We talked about all that. So today we're gonna continue that, and we're just gonna talk about 7 easy ways to pay off your mortgage early. And this is important for you to know in your professional or your personal life. It's also good to know for your professional career. That way you could coach your clients, teach them, and hopefully create wealth for them. That way they could keep coming back and referring you people, okay? So 7 easy ways to pay off your debt. And again, if you guys want the full thing, you guys can go on daveramsey.com. His website has some good information there. So a lot of people don't even know that they could pay off their mortgage early, right? People still ask me like, hey, but I can't pay it off because then there's gonna be like prepayment penalties, I'm gonna get charged and all this, and it's like, no, it's not true. It used to be like that, and people used to get, basically bad deals, and they're still scared from the times prior to the crash in 2008. So we have to educate them. So one thing that's pretty cool is a bi-weekly mortgage payment. So if you start making bi-weekly payments instead of one time a month, you start spreading out every 2 weeks for the entire year, you could easily pay off your mortgage early, and you can knock 8 years off of a 30-year mortgage. So instead of paying it off in 30 years, just by making basically the same amount of monthly payment every month, but just spreading it out every 2 weeks instead of once a month, you can pay off your mortgage in 22 years, which is crazy. It's insane. Why? How does it work? Well, it's simple interest, right? So every month, instead of paying a $1,500 payment, for example, once a month, you pay $750 every 2 weeks. So that $750 goes towards principal. So the next 2 weeks, they can't charge you interest on the principal that you already paid off, the $750 that you paid off the first portion of the month. So now, every month it's like that. You're paying less and less interest. Therefore, more of your money is going towards your principal. So you pay it off in 8 years. You save a ton of money on interest. If you buy a home in California or in San Diego, it's going to be into like the $100,000 range as far as saving money on interest payments. So that's really cool idea you could teach your clients to do. They also talk about, hey, like make an extra house payment every quarter. So every quarter you save up some money and then you make it off. So that's 4 extra payments a year. You'll pay off your mortgage in 11 years early, and you'll save more than $65,000 interest on a $220,000 purchase. That's pretty amazing. Saving $65,000 in interest, paying off your mortgage 11 years earlier just by making an extra house payment every quarter. Okay, so it pays to save money and then just send it off to the bank so you could just lower the interest that you're paying on it. The next interesting example has nothing to do with a house, but it just says, hey, bring your lunch to work. So it's basically saying if you spend $100 a month on lunch, which I think a lot of us spend a lot more money than $100 a month, at least I do. You're gonna save more than $28,000 in interest if you just use that $100 and then you send it into your mortgage on a monthly basis instead of going out and buying lunch somewhere. I'm just bringing a lunch bag with you. All right, so that's a good example there. What else do we have? He talks about downsizing. Downsizing, of course, you could pay off your home early. If you don't need a big home, hey, downsize it, sell it, and get a lower one. Refinance. Now, the refinance, again, I've talked about refinancing. It could be very detrimental. I've seen a lot of people make bad moves of refinancing. But if you refinance it into a 15-year mortgage, right? You go from a 30-year to a 15-year, you're gonna have to pay it off faster. Usually your interest rate's a lot cheaper, and you pay a lot less interest over those 15 years than you would over a 30-year mortgage. So that's another way to pay off your mortgage early. Talks about, don't bite off more than you could chew. Put at least 10% down, save up money to buy a property, and don't buy anything above your means. Talks about having the right real estate agent, and talks about 100% down. So it just says, hey, look it. Every time you borrow money, it's gonna cost you, right? So the more down payment, or if you could buy it cash, obviously you're saving money. So people that buy stuff cash, over time they save money. They might not have the leverage, but if you're not a real estate person, maybe it does benefit you just to have everything paid off. If you're a real estate person, you know what you're doing, then at that point you could make some monopoly type moves, and you could pull money out of this property or that property. But obviously you have to do it with caution. But that's how you pay off a house early. There's some good examples in what we just went over. You should use it in your own life. You should share it with your clients. It's good knowledge to have. We'll see each other next week, and then we'll talk about how to pay off your debt, the other personal debt, using a debt snowball. See ya.